Well, I'm excited. So I don't think we need a whole lot of introduction other than Duke. I've been trading with Duke, so personally had the opportunity to be trading with Duke since, well, this year really. I think a little bit last year, but had the opportunity to really kind of see his evolution of his trading, right? And he has come a long way in such a short amount of time, right? And he is one of the ones that will put in the effort and never say quit, never say die. He's never once got given up. He's always here every day. So if anybody can speak with authority on this topic, it's Duke, right? Because he's probably knows why all of his trades fell, and he's back tested, understands
Probably.
it, and has seen it 1,000 times, and now can speak with authority of why trades fell and how to avoid them, right? So that being said, we're going to segue into Duke. So go ahead and take it away. I'm really excited that you're going to be talking about this, because I want to know why my trades fell.
All right, thanks for the intro, Dave. And just a little bit about me, right? I'm an aggressive analytical trader. So like David said, one of the first lessons he taught me was to feed the aggression. So I went into simulated accounts, and basically just clicked the way, you know, I can add 30 trades in 1 second. So very, very fast. And then basically lost big, kept risking out. So started toning that down basically, and then learning how to snipe, and really, like David said, just recognizing the signals, and also managing my trading strategy, right, as far as position size and things like that. But tonight we'll discuss some of the things that I think a lot of traders face that are pretty common. But I always want to start out with for the newbies, and we'll cover a little of the market basics, right? And I'm going to really dumb it down and simplify it, okay? Which is, there's really only two major types, right? The market either expands or consolidates. If you can recognize those two things, then you'll learn how to profit, okay? And the next is the market moves in waves. You know, there's always going to be, like in this case, a down wave, and then followed by an up, then a down, and an up, and a down, and an up, and a down, and an up, and a down. It always moves in waves. Okay, but the problem is that most of the times we don't recognize them, or when does it end, you know? And so then we can get in trouble, because then sometimes, like with watching markets, especially right in here, you know, a marching market, and if you're trying to fade this, you know, you can get in trouble. So we'll discuss some of that, and how can you kind of recognize some of the signs so that you can basically manage your risk, you know, and don't start going into this. Why failing? Why did the trade start to fail? You know. So let's start with some of the lesser losses. Is why your equity curve doesn't seem to grow. Because I was facing this for many months, and I know a lot of traders in the community are struggling through this, right? Some of the things that we do wrong is we enter early. And this is not that bad, because if you enter early and you do position sizing correctly, it's okay. You can manage it. That's why I kind of put it at the bottom of the list, because as it grows up, the severity increases. Okay. Next thing is we cut profits short. So many times we just, oh, this is good, profit, and then we're out. Okay. So that kind of leads to the next piece, which is then we're too light. So if Nick Kovash is on, you know, he's the bus route king. Okay, so even when we catch those waves, we're not heavier enough in our position size to actually make any decent profits. We might cut it at 0.5 or 1%, but then we lose more than we profit. Okay, so then the equity curve just seems to keep going down and down and down, and it might go up a little bit and then down real fast, and then slowly up and then down real fast. And that's what I was facing for a long time. And then found the community, right, and the environment to really grow out of that. Any questions so far? Let's continue.
So you want this, you want a presentation or a conversation?
It's a both, you know, we
right.
want to keep it interesting.
Keep it interesting. I can do that. I can help, pick me.
So Megan is also an aggressive analytical. Okay, interesting.
But you would never guess it.
Show us your aggressive side, Megan.
I think maybe Duke, you unleashed it. You gave me permission.
Oh no. Put that back in the bottle.
Watch out.
I'm just kidding. I'm just kidding. It's not.
All right. Well, then you can, if you feed aggression, then you start to see this right here. Why did the trades start risking failure? Okay. Of course, a lot of trades are going to have drawdown, especially with counter trend. So if you manage it, it's okay. That's why it's at the bottom of the list. Okay. But then this is one of my problems, going too heavy too soon. So as long as you manage your position sizing, then you'll be okay. But if you don't, then you might get, minus 1%, minus 2.5%. You might touch on -3, -4, or even, get really bad. Okay. And then here's the next is you let your losers run. Okay. And so we hear about this all the time. And then how do you dig yourself out of a hole? But if really you cut your losers sooner, you won't be in such a big hole. And then this is the next one. You don't know when to exit. So many times I see trades that are profitable and you don't take the profits and it goes against you and it just keeps building against you, building against you. Or you're right at break even, or maybe it's a smaller loss. Then you're just trying to wait for it to get the profit, and then it pops against you, and you just don't know when to exit, and you take bigger losses. Okay. So next thing is actually when the trades start to fail. Okay. So the biggest thing is this. I see a lot of traders take max loss. They're like, oh man, I really can't stand this, and then they exit out of the trades, or it hits their stop loss. And right after that, it turns, it pulls back. And you could have taken a smaller loss instead of the max loss. Okay. So this is the first sign of failure. Then the next, I think this is the most important, is when you don't recognize when the market changes. So you're trading in one direction, and then the market changes and it's not coming back. And it's much better just to flip the direction and the bias, but you don't recognize those signs. So we'll go more into that. And then this is, I think, the ultimate loss, which is you risk out. Okay, if you're like in prop firms, it's going to disable your account, right? And now it disables you for the day. Okay, -5%, -10%. And that's when it really fails. Okay, and that's what we want to try to avoid. Are there any comments or questions so far? All right. We'll keep going then, okay?
Yeah, I think we're good.
So I like to use analogies to help transition things and kind of help people understand. Okay, so if you don't know, this is a pothole in the road. So if you drive over it, basically it damages your car suspension, engine doesn't last as long, wheels doesn't last so much. So it's not good driving over it, okay? And especially if you drive fast over it, you get that bang, and then everyone seems to jump up kind of thing. Okay, so here's the first scenario. You just don't see it. Maybe you're looking off to the side right here.
That's me.
You're I'm trying to get annotate here. You're looking off to the side of the trees or something. You don't see the pothole, and then boom! Whoa! Where did that come from? You know, you get this sudden jerk. Okay, scenario 2 is you see it, but maybe you saw it too late. Okay, and you still managed to drive over it. Or sometimes maybe there's ongoing traffic and you can't avoid it, so you do have to drive over it. But the whole point here is that if you see it, can you slow down for it, right? And then the third scenario, which is you see it and then you avoid it. Okay, so analogy as far as trading, okay. If you don't see it, you don't analyze it, then you're not going to execute for it. Okay, but if you can see it, sometimes there's still a gap. Okay, and you still don't execute properly. So you see the market's turning, but then you don't put trades for that, or you don't get out. Okay, but if you really see it and then you are in sync with the market and in sync with your analysis, then you should execute properly and execute on your trading strategy to profit. Okay. And so now let's cover how to avoid the failed trades. And I like to use the traffic lights because those are your signals, you know. And when you see the signs, as far as the traffic lines and the lights, it usually starts with a green or a yellow light, right? Because once it starts yellow, that's like your warning signs, because what's up next? Anyone know what's the next light, the next color? If you start seeing a yellow light, what's the next light?
Red.
Red, exactly.
But do you go faster at yellow?
Go faster at orange.
Orange. I like it.
Exactly. So, I mean, sometimes you go faster, and you,
What?
but other
You
times
run the
You
red
do?
light.
You do, Duke? Oh.
yes. My wife says when you see this yellow light, speed up. But the red light is now when basically the market breaks. You know, it changes the structure. It breaks out of consolidation into an expansion, or the opposite. It breaks out of expansion and starts consolidating. Okay. And next thing is the green light, you know, being profitable, consistently profitable, right? Which is you have to raise your awareness or your analysis and understanding the market before you can improve on your execution. Okay. And I see that's where the two gaps are. Because even if you come to the classes, what you're doing is, like with the live trading, you're raising your awareness. But David made a comment in one of the sessions, your execution hasn't changed. So even if you're more aware of the market and the structures and, you know, like the 1, 2, 3s, ride the waves, things like that, if you're not going to change your execution, you're not going to change the results. So a lot of you are trying to expect profitable equity, you know, but your execution was for a down equity curve. So it's like, I'm doing the same thing, but I expect different results. That's what they call what? Craziness? Or the definition of insanity. So you really got to change. You got to adapt. Okay. So any comments there or feedback so far? Any objections, arguments, or disagreements?
I think everybody recognizes themselves in what you said.
I like what Karen says is that we learn new stuff, but not how to apply it effectively. I think that's really good.
Yeah,
Exactly.
right, exactly.
So you got to do both. Okay, because if you're learning the new stuff, that's like you seeing the pothole, but then you still ran over it. Okay, it's not good. Okay, but if you can adjust, then you can avoid the potholes, which means you can avoid the failed trades and actually start profiting or get out of the failed trades, you know. All right, so the next part of the session will be more advanced. And so if you kind of not following along, it's okay. You know, eventually you'll raise your awareness to where you can understand. So it's good to basically come back to it when your skills have improved. Okay, but I want to speak to more of the traders who are in the community longer and a little bit more advanced, right? And basically help you reach that next level. Okay, so the first is recognizing the warning signs. Okay, so this is an M15 chart, and we're going to cover this turn right here, right? It's a double bottom and market is turned. So how can you actually start to recognize the signs? Okay, because if you thought this was, let's say, you know, a down wave, maybe you're still selling right here. Okay, but you should start seeing when the market's changing. So I'm going to zoom in here. This is a 5-minute candle. And the first thing that I want you guys to realize is the last 5-minute candle. Okay, the body of the last 5-minute candle is your first warning sign. Because if prices are coming back to it, it's beginning to stall. Okay, that means that down wave is beginning to lose momentum. Because if you look here, like let's say you start here or even here, the last 5-minute, as far as the major one, you know, keeps going lower and lower. This one was another warning sign here, but it keeps lower, 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 lower. And then this one, again, it touches it. And then we'll start to see the signs as far as continuation and reversals, where it turns into now an up wave. You guys follow so far? Okay, so if you watch the 5-minute candle, you'll begin to see the signs. Okay, and the next one is 2 to 3 candles away, which is on the 5-minute, which is really just the last 15-minute candle. So this is your danger. Hey, market's about to turn. It just hasn't turned yet. Okay, so where does it actually turn? Well, right here. Okay, why? Because that's your last support and resistance. You see this area here where you kind of dojis? That's your support and resistance, because market is fighting, right? It's going back and forth, and then it dropped down. But if it comes back into it and it goes to the top of it, this is the last chance. So if sales wants to push the market down, this is the last chance to do it. The moment it closes above this, the structure has changed. And you if you're selling into this, you really want to be getting out now. You really got to go into fix it mode and get out, like right here. Okay. But a lot of you are saying, oh, it's going to retest the pivot here. You're expecting too much from the market, and then it goes against you really big time. Does that make sense? But if you're doing like a Talon and you're building into this, you can be profitable right there if you know when to get out. Okay. Any questions so far?
There's few. So how can we increase the speed? How can we increase the speed mentally while trading?
Well, it's raising awareness, right? Because it's like if you drive, the first time that you drive, like my nephew, he's learning to drive, and for me to tell him, look here, look here, look here, it's too much for him to process. Okay, if you do more of it, you know, you don't have to. And it's just natural to look at, you know, like your side mirror, you know, your rear view mirror, your front. It's natural. You can do it in the blink of an eye, milliseconds. Okay, so you got to do it more. Butts and seats, okay, or more time in simulator. It's going to raise your awareness. Okay.
Kind of like what I say, you got to get to the point where you can just read and react, right?
Exactly.
Without thought, right?
It becomes more instinct.
Yeah.
Right. And so, like, let's say you're driving, and most of the times, as a new trader or a new driver, what do? You have your hands on the wheels and so focused like this, right? That's all you can see. But once you get good at it, you're relaxed, you know, you're like watching the sceneries and stuff, and you're okay. So it's the same thing. You begin to see the market and the flow, and then you can begin to recognize, oh, hey, look, this is really pushing up. I probably need to get out of my cells. Hey, this is the last of it. It broke the trend. Hey, this is it. Okay, I got to go into fixing mode right here, you know? You begin to recognize those signs.
Lee has a great comment that I think a lot of us share, and that is, you never know it's a pothole till you're in it.
But this is an example of a pothole.
I would agree.
But here's the, what I'm raising is your awareness. If you can recognize the signs, then you can at least slow down. So like if you're selling, well, maybe slow down your cells and really go heavy here so that you can get out here, or go heavier here. Okay. But if you're like me, when I'm with the wave, this is where I want to load up for this wave up. Okay. But after the pullback. All right. Okay, so you can see here when it comes back down and the candle did not close. If you use the same thing as far as the yellow and orange, here's the yellow, right? The last 5-minute candle, it touched, but it could not turn the market. It came back down, but could not turn. And this is the 50%. So we talk about it in different ways. We talk about 50% of the last move. Okay. This is just a different way to see it and really call it out for you guys. And I say it with the 1, 2, 3s, because David is doing, you know, the 1, 2, 3s like this. Well, I'm trying to show you here the 1, 2, 3s as far as candle body closes. Okay. Any questions or comments, Navar? All right. So we'll continue and we'll keep seeing some signs, right? So let's say now you're in buys. Well, where do you exit? You know, where should you secure your trades? Well, if you want to do a ride the wave exit, then that's where you should exit. But if you want to build back into it, well, this is your first danger sign. Why? Because it's the last 15-minute candle right here. See that? 15 minutes, which is also the last 5-minute, 2 or 3 candles away. Okay, but you can see the market wicked right here and the body closed above. So it never even made it to the last support zone right here. Because if it came all the way to here, it would have turned the market back down. Okay, and I think as traders, you guys struggle with recognizing structure. But if you just do the 1, 2, 3s like this, hey, where's your risk? Hey, where's your pullback? And where's the market going to turn? Okay, and this is it. So the market did not turn down. So what do you see? It continues up. Okay, and it can, if you are riding the wave up like this is good profit. This is a good 1, 2% right here. Just being light and normal. All right. Can I show the 1, 2, 3s again? Yes, it's basically the candles like this. So this is the 1, 2, and 3. Okay, so this is the last 5 minutes. This one doesn't count because it's like added. It's an inside candle, but I'm counting here the body. Okay, so this is your first warning sign that the market wants to pull back. So you really shouldn't be buying at the top like this. Okay, and then right here is when it wants to turn. And so you could build a small buy position like this, and that's okay. That's better BTP. But if it passes this is your warning sign. And guess what? This is the last 50% right here. See? So if the market comes down to here, which is below support, and past 50%, it's turned the market and your up wave is gone. And you really need to go into fix it mode and get out of your buys. So can you guys start to recognize the potholes now in trading? right? Let's keep going. Okay, so let's do it on the reverse side here. You know, market's pulling down. So let's say you were in sells. Well, where do you get out? Okay, so if you're selling, like you're building into your sells, okay, and the 5 minute just closed, right? You could get out right here and recycle, or you can just secure your trades right there at the yellow line. Does it make sense? Okay, but in this case, you can see that it doesn't come down far enough, right? And it goes up. So this is where it reverses again and turns up. Okay, so if you're a sells, you really need to get out, and then hey, you could build into the sells and get out right there because the market has turned up right here. It went up, pull back, and now continuing up with this break. Does that make sense? Need more examples? Yeah, we'll go through some more examples, okay? So now let's go higher, right? Is this the time to get up or get out, you know? And look at where we're at. Here's the first danger zone. Okay, and this is where the last 2 minute, 2 to 5 minutes. I put it here because this is like where buy prices should come to and bounce. Okay, because that's support. Right here, this is like support. Okay, so if it comes here and then bounces, then that's kind of expected. But if it comes deeper to the bottom of that support, which is the orange line here, that's your danger sign saying, hey, market wants to turn down. Okay, but in this case, it doesn't even come that far. And this is where it would really turn down. And that's the 50% of the move. So in this move, this is 50%. Does it make sense? Market can still pull back to that much and bounce. It's just it has to break below that. If it breaks and closes below that, it's turning down. Okay. But you can see if you were riding the wave up, you know, you got really good profits. Okay, so let's look now at the top of here. Can you recognize the signs? Well, maybe this right here is news or something because it went down and it came back up so fast. But let's look at the last 5 minute candle. And then 2 minutes or 2 to 3 candles away. And then this is really where it turns. And so you can see it. If I drew that on the, on this one right here, this is, see that it dropped below, it came back up to the break, and then it really dropped. So this is an example of a ride the wave to the downside. But if you can recognize the signs, the early warning signs, which is this right here, that market came up and then came back and got rejected. And not only that, it really came back down and then broke this support with this candle right here. Closed right at it.
So Duke, I have a question. You're saying the early warning sign there is it's failure for the next candle to come back down to that yellow line at the end of the green.
Yes. So when it breaks the last 5 minutes, it typically wants to go to the next 5 minutes. Okay, so when it breaks one body, it tries to go to the next body. Okay, if it prices like right here, it didn't touch it, look what happened, it negated.
Yeah, so the failure is back on that first one, but then it did do it.
Yes. So the point here is start seeing the warning signs, because if you are, let's say, buying here, and then you really want to get out here, because this is the 50% of the drop.
It's your chance.
So if you were buying right here and you're expecting this, well, you might be asking too much of the market. Okay. And so if you're buying here and you got out, you're profitable. But if you're buying here and then you held, you're now losing on your buys right here. Does that make
Okay.
sense?
It does.
Okay, so a
Thank
lot of you guys are not recognizing the signs.
Right.
So you get in your positions and you don't know to take profit, you don't know to get out, and then boom, it goes against you big time when it was profitable for a snippet of time. Okay. So now let's reverse it again and see where the market turned. It turned back up, right? Well, as the prices was coming down, you can see here that the 5-minute is actually weakening, right? Because you got this big body, big body, big body, and then suddenly like a doji right here. So it's not that hard to break this body. Okay. And then what's the next danger sign? Well, right there. And then this is where it breaks back into the resistance. Because if you look, this is a 5-minute, came, there's a doji area right here, right? That's your support and resistance now, dropped. And not only did it come here, right? It came to the bottom of it, whipped down, and then went up again. So this is like your danger sign. Hey, if you're in sells, you should probably be getting out or going into fix-it mode. Okay. Because look what happened next. It came up, it came down. So this was your chance to get out of your sells. And then it came back up and it came down again, giving you a second chance. But a lot of you guys are not taking it. You're thinking, oh, it's going to come down to here. But look what happened here. It already broke. Okay. And then guess what happened next? A major wave up and drift up. So if you're in sells now, you're losing big time. And here was your next shot to get out. And after that, you had no shot. You guys start seeing the warning signs now, the potholes. Okay, so if your sells here, it's okay, but you really need to get out right there. No, all this is UJ or EU, I mean. This was EU, and this was like a few days back, July 11th. So it's like last week's. Okay. All right, so let's go with the next piece, which is market breaks out of a range or a consolidation, right? So market right here, you can kind of see it's like, well, I really can't tell because it's just a big range right now. But if you really look at the warning signs, you can start to see which way it wants to break, which is at the end of this, you can see it stays above the 50%. So then that's also the direction that it breaks. It breaks up. Okay. So if we look on the 5-minute candles, here's your range, the top of the range. And then let's draw the warning signs here. Okay. So when market breaks up, right, you could be selling back into the range. That's what this move is. But see here, it didn't come down far enough. It only wicked right here. And so it's starting to go back up again. Okay. And if you do the signs again on the reverse, it'll be like this. Okay. If you want to see the pullback, okay, and it does come into it, but you can see it doesn't break the structure right here. It only comes back to the same place, which is still a continuation up. Okay, so it's just retesting the break, but it continues up. So if you guys are in sells, hey, this is your shot to get out. And some of you guys are like, oh, it's coming back into the range. I should hold. It should come down more. And it doesn't give you the shot. Okay. So if you can start to see the warning signs as far as price and structure, then you should increase and improve your execution. You know, that if you're recycling trades or getting out of your trades and then placing them back again at better positions, okay? Or flipping as far as the bias. Any questions on so far? All right, so this is a different one, and this is actually this morning for you, Jay. This is the M1. So you have a range market right now in this zone here. And recognizing where does it break? Well, let's look at the last wave, okay? A market just came down and it's at the bottom of the trend. So you got a 0, 1, 2, 3s on the bottom. It could break down, right? So for me, I would probably be in sells, thinking, okay, it might break down. But here's the first warning sign. It comes back up and closes right at the body of the last 5-minute candle. Okay. Then here's the danger sign, because not only did it pass, so this is like 2 candles away, and then it's past 50%. So in this case, it's probably going to break up. The M has failed and the W is forming. So if you build now into the buy position, then you could be right in the wave up. Okay. But if you're in the sells, well, look at that. It comes to the top of the range, and this is your last shot. Okay. And it breaks out. But then this is where you need to start recognizing that you really got to go heavier right here, because the market structure has broken. It's going up right now. And so if it comes back to the break to retest, that's your shot to get out. The fixing. And even if you didn't load enough here, then you need to get out here at a less loss instead of max loss. So instead of getting out right here at the max loss, get out here. This should be your break even, a profit, or less loss. Okay. But you really didn't want to get out. Why? Because when it came to here, if we draw the signs, here's the last 5, 2 candles away. And then where would it really break down to sells, and where should you kind of hold is right here. Okay, but it didn't do that. It went back up. All right, and what happened is actually it formed a second range. Oh, see, I just covered it. I manually drew it, and then I already did it in the presentation. You see that? So even though it pulled back, it hit the orange line, which is a risk of turning down again because it's re-entering the range. It didn't do that. It bounced. So you really need to be getting out right there if you're in sells. Okay, and here's the second range that was forming because it went to the top and it came back up. So if you're in sells, it gave you a second shot to get out. And many of you guys, oh, look, the M's forming. But really, you don't know that it's going to form because it wicked. It came down and it wicked. See that? It could not pass the 50%. So this is what we talk about in the live trading zones or trading rooms, I mean. But it's just a different way for you guys to start seeing it. Okay. So it breaks up. Okay. Any questions on that?
Debbie has a couple.
All the examples that
Karen has a couple. She says, how did you, seems like you've learned to read the market forward. Seems like, how did you teach yourself to read the market forward?
I did a lot of simulator. Okay. And I basically looked for where I failed. So I looked at my analysis like, hey, you know what? I thought this market right here was going up. So I was buying into this and it dropped like crazy. Okay, so then, let's say if I was thinking this was going up, pull back like that, Well, where did I fail? Where did I not recognize it? You know, I basically ran over the pothole. But I need to go back and now with hindsight, analyze it and say, oh, look, hey, I didn't see the warning signs. Okay, I didn't see the warning signs like, you know, at the top right here, and especially right here, I really got to fix it. So that's the point, is that if I start seeing the signs early, like this right here, well, and I want to ride this wave, I could be selling into it, especially when it came like this, came back and would not come up 50%. That's the clue. Hey, the up wave is ended. Okay, so I could now be selling right here, or I could be using this to say, oh, it's at the top. Let me build my sell position. See, and then write it down. But then it's like, how do you know where to get out? Because even though I was profitable like this, it would come back like this. And it's like, oh, I didn't take my profits. So just by practicing more often, and I'm looking at where did I fail, which is why I titled it, Why Do Trades Fail? Because I looked at those things. And then I started analyzing and seeing, oh, whoa, there's warning signs all over the place. I just didn't see them. So if you think about a car and it's about to turn a lane, there's a blind spot. So you're looking in your side view mirror and your rear view mirror, you don't see the car. And what happens? You turn into a lane and boom, you crash. You have a blind spot. And so that's what all these warning signs are, is, hey, maybe that's your blind spot. But I learned to recognize them, right? Because when you're turning into a lane, they say, check your blind spot, right? And cars today have signals too that says blink, blink, blink. Hey, there's actually a car there, beware. And so that's all this is saying, hey, look, beware of the signs that market is turning. Yes, plotting and analyzing your losing trades could help, but it's also recognizing what were you thinking, because in the moment, your analysis could be correct. You know, like, let's say I blocked this off. Oh, I didn't do it right. Right there, that looks like an uptrend market. So many of you are buying, and that's very valid. But then what happens next? It stopped. It started to range. You see it? It's starting to do a range right here. So the up, whoops, wrong one. The expansion has stopped. And this now is a range market. So what happens after a range? It can either continue up or continue down, or it drops down, I mean. But how do you see the signs? Well, the early signs is like this. It broke down from the range. Okay, it could reverse. And that's what it did. It reversed, but it stopped. It stopped at 50%. So if you guys are in buys right here, this is your shot to get out. Okay, and even if you do take a loss, you know, you take a smaller loss. So even if you had a buys up here, it's a smaller loss if you get out somewhere in here or even here, compared to where it drops and you guys are taking the losses down here. Does that make sense? And that's one of the ways that you fail as far as trades is max loss. So if you guys are cutting your losers shorter sooner because you recognize the signs, then you could have been flipping to buys or sells, I mean, and profiting. So even if you take a minus 1% loss right here, this could easily be a +2 or +3 so that your net is +1 or +2. Because this was a big wave. Sometimes you see the warnings, but you refuse to believe them. Yeah. But that's the gap that I mentioned in scenario 2. You see it, but you don't execute. You still run over the pothole. So you guys need to get to level 3, which is you see it and you execute. Chuck and chuck. And that's what I was getting more consistently to. I was improving my analysis skills, but more importantly, I was changing and adapting my execution skills. Lee, you need new tires. Yes. Running too many potholes, right? We can't see where or how to get out. Right. And that's one of the reasons why trades risk failing, is we don't know where to get out. Okay. So any wrap-up questions?
Hilarion says he needs a new car. How are you going to provide that? Because he hits too many potholes.
Well, the warning signs are subtle. It is if you don't recognize them, but if you start to see it and trade the market a lot, you start to see them, and if it's not so subtle, it becomes more whoop whoop whoop, blink blink blink, you know, danger danger, warning warning, you know. Going through the comments and seeing if there's any other questions. So Hilarion made it earlier, hey, making statements to myself, more like, when market goes my way, I would do this. Market just goes the way it wants. I don't do enough of if market does this. Correct. We need to really think about, if market does this, how are we going to execute? Can you learn where to get out in the teaching you do for us? I don't understand that question, Kieran. Or maybe that's for David, right? Where and why to get out? I think that would be good. You can ask Khalid or William to make a bot. I code as far as my daytime job, and I don't want to do more of it at night. I'm trying to get rid of the job, replace it. So if I'm inspired to do coding, then I will. Because like when I was writing the break-even indicator for Alveo, that was like an inspired thing. I was like, man, everyone's complaining about it, and it would really be helpful. Let's see if I can figure it out, you know. But after that, I'm like, I don't really want to code. Not an MT5.
What are you asking me to incorporate into my teaching? I'm just curious.
She's talking about exits.
Oh.
Learn where to get out and why to get out.
Isn't that what we do every day? I mean, I'm not saying that, like, I'm not saying, I just like, if, I mean, that's kind of what we teach. So I'm not sure if there's a specific thing. I don't mean to say that as jokingly, but if you feeling like I'm not doing that, then I'm like, what am I not doing?
Maybe more like a basics and going more into details.
More class.
Because we go fast through it sometimes.
Stuff than live market stuff.
Yeah. Like here with the presentation is slower, that you can start to see it. And plus, I gave you hindsight, and so you really see it.
I thought you learned not to use that word. It's perspective.
Okay.
or retrospect.
Well, we're not live trading, so no dolls.
That's true. That's true.
Not what you're teaching.
Anybody else have any other questions, comments? I like it. I like your comments, though. Yeah, today was a good teaching class for sure. When I think hopefully you guys, I started trading towards the end. So if you guys had to bounce, I know it was a marathon session, but I started teaching how to build into a ride the wave. So that was a class. That was a good class. Yeah, this was really good, Duke. So I appreciate you putting, I love it. You guys can obviously see that he put a lot of time and effort into gathering this information. Duke is definitely by far one of the traders that I know that invests a lot of time and energy into practicing. Like he practice. That's the way I did it. That's the way I learned too, right? You can't just lean on somebody else's knowledge. It'll only get you to a certain point. At some point, you're going to have to actually do, and you're going to have to figure it out for yourself. I've said this multiple times to Duke and in public and in private, where he's been kind of like a really, really good trader for me to figure out how to teach him how to get to that next level. He's really challenged me to help him to get to that next level, because he keeps continuing pushing and his advancement is so fast. And I'm always like trying to figure out now, how can I help you? And I've racked my brain many times just trying to think, how can I help Duke get to that next level? How can I help him overcome that, overcome whatever it is that he needs to overcome, right? He does do everything that I've asked him to do, and and more, and he'll continue to do that. And so I would probably echo everything that Duke has done here is because he's done it 1,000 times, probably 2,000 times. And the best way to learn is from your mistakes. And Duke is really, really good at analyzing his own failures and trying to figure out why he failed, and answering that question for himself. And ultimately, that's what you have to do as a trader. When you take a loss, you have to go back and study why you took that loss. And that's going to make you a better trader. You're not going to have somebody that's going to say, this is why you took that loss. You have to go back and do it. Then again, Duke is really good at that. I have novels of him writing in Discord to me and posting things of what he's seen, what he's analyzed. And I encourage that for him and for anybody else that wants to become a better trader or hone your craft. Figure out what you're doing wrong. And he does ask questions. You guys can ask questions, but ultimately it's a lot of repetition. Would you agree with that, Duke?
Yes, it's a lot of repetition, but it's also intentional practice. Because like one of the sessions you mentioned, it doesn't really benefit the group to do perfect execution because we actually don't learn that much.
Right.
We learn more through our failures, actually.
Absolutely. And if you don't learn from a failure, then that was a mistake. But yeah. Anything else, guys? Anything else you'd like to add before we kind of shift gears and we're going to kind of jump into our hot seat night trading session for the hot seaters? But anybody else have any last questions before we're going to call it? Thank you again, Duke. Appreciate the time, energy, and effort that you put into doing this. And always awesome. Always learn something whenever you open your mouth.
So Dave, you mentioned that tonight you were going to talk about the incentives that you have for us. Is that just for the hot seaters?
It is just for the hot seaters. It's the hot seater account incentives. But yeah, but thanks.
Okay, not for people who are in the
not for
beta.
you plebs.
No, so not for the beta testers.
Yeah, no.
Okay.
Yeah. Thank you though for asking. Appreciate it.
Yeah, thanks.
All right, guys. With that, I think we'll call it. We'll let you guys on the East Coast get to sleep, and and we shall see you guys in the morning. Once again, thank you, Duke. Thank you, everybody, for joining. And if you want to watch this recording, it will be automatically posted to the website. You can go there. And we'll also be pushing it to YouTube here pretty soon. So thank you guys, and we'll see you guys in the morning.